Hello everyone, hope you're doing all right. Welcome back. First of all, thank you for all the love and support. It's been absolutely insane. On all socials, it's absolutely insane to see. I appreciate you all. Next to that, thank you also for the recommendations and suggestions on a microphone. I've bought a new one. So tomorrow, hopefully the next video, willingness on price tomorrow will be recorded with a new microphone. So today we're going to talk about draw on liquidity for a little bit. How I get to my draw on liquidity, you can take from it what you want, use what you want, and hopefully it helps you to become independent and see the draw on liquidity on your own. So first things first, price is either rebalancing or taking liquidity. Next off, price is moving from PD rate to PD rate. I'll keep that here for us to keep the reminder. So if we take a look at the monthly first, then the weekly, then the daily, I'll show you my narrative and how I came to my draw on liquidity this past month, and I'll go a little bit over what I expect the coming month. I always start off my analysis with the bonds. This is ZB1, this is the 30-year treasury bond. Then you also have the 10-year treasury bond and the 5-year treasury bond. For simplicity's sake, we're just going to stick to the 30-year treasury bond. And next we're going to move to the dollar. And I'm not going over a pair, but generally the thing would be first go over the bonds, then over the dollar, then the pair you want to trade. This creates a general view of the market, because if the bonds are moving lower, the dollar should be going higher. If the dollar is going higher, E-mini S&P or Forex, whatever you want to trade, should be going lower, also depending on which pair you are trading. And if the bonds are moving higher, dollar should be going lower. If the dollar is going lower, E-mini S&P should be going higher. All right, so if we take a look at the monthly time frame here, we see this short-term range. I draw my premium and discount on it. This is my premium and discount on the short-term range. We can see we have a monthly SIBI, sell-side imbalance, buy-side inefficiency. So what's price doing on the monthly time frame? It's rebalancing for now. So the next target would be this low for me on the monthly time frame. That's it. As simple as that. If price continues higher here, that's what we're going to touch on tomorrow. The willingness of price, which adds on perfectly to this video. So make sure you watch it. So if price wants to continue lower, it should respect this fair value gap and should continue lower from here, taking out this low. That will be ideal. That's it for the monthly, as easy as that. Then the weekly, we see we've just rebalanced the monthly SIBI. Then we swept this high. We saw the rejection moving lower. Now ideal for now, if we come into this weekly SIBI overlapping with this weekly breaker mean threshold, I would love to see ideally something like this and a move lower for me to participate in it and as a strong confluence. But for the past month, we've trapped longs. Price moves from buy side liquidity to sell side liquidity, from sell side liquidity to buy side liquidity. Why is this? Because price traps long traders here. Where are their stop losses? Their stop losses are underneath recent swing lows, which is this one in this case. So longs are trapped here, their stop losses are this one. So we trap people, need opposing liquidity, which is here. And on the daily, we confirmed this sweep by this failing order block. Price is failing to go higher and it's showing the willingness to go lower. I'll touch on this more tomorrow, but we can see we swept here. Breakout traders are long, their liquidity or their stop losses is here. This was the main idea behind everything on the bonds for the past month. Now let's take a look at the dollar. All right, here we are on the dollar. So you can see on the dollar, it's moving lower, now moving a bit higher. It's agreeing with what the bonds are doing. We saw a SIBI on the bonds and we see a busy buy side imbalance, sell side inefficiency on the dollar. So it agrees with the bonds. So what do we expect here? We're moving from this busy to potentially this SIBI, this volume imbalance plus this monthly SIBI, bearish fair value gap. I don't reckon this is the top of the dollar, and I don't think this is the bottom of the dollar. Of course, that's easily said, but what I would expect is something potentially like this. That would be ideal. Of course, this is all predicting and speculation. Like I said, tomorrow we'll touch on how to react instead of predict. This is just to give us a sort of narrative and draw on liquidity, and then the reaction of price is what confirms our ideas. So this is our target for now, our draw on liquidity on the monthly time frame. The weekly swept this low. Now short traders are trapped here. Their stop losses are above recent swing highs, which is this one and possibly this one, which agrees with our idea on the monthly time frame. You can see we disrespected the weekly SIBI. That resistance has now turned into support, as well as this weekly BISI is being respected. It's pushing price higher like we want to see. So then on the dollar, you can clearly see the build-up of liquidity here before we sweep into the monthly BISI, the reaction higher, the market structure shift here, the disrespect of the weekly SIBI that then turns into support. See how the bodies respect it. The sweep of the previous week's low into the weekly, what we saw here, the weekly BISI. So price is clearly bullish, and the draw on liquidity would be right here. Now let's ask ourselves what the monthly draw on liquidity likely is. It's right here. So if we have a daily order block here, what does that mean? What does that mean in the sense of our order block video? That this is not an order block. It's low probability likely because the monthly draw on liquidity is here. So our narrative will be the discount arrays would need to hold here in order for price to get here. So I'll put a picture up on the screen right now. Here you can see I expected that low, which is this low, to hold if we wanted to see higher prices on the dollar, because we came off of this rejection block. We're moving from PD ray to PD ray to PD ray. So PD ray to PD ray. Where here we are rebalancing to taking liquidity, which on a monthly is rebalancing. So it's all in context with each other. The lower time frame is in context of the higher time frame. So because our draw on liquidity on the monthly time frame is here, the daily should be in context of the monthly time frame, which is really important. And then your 1 hour, your 15 minutes should be in context of the daily. And then your 1 minute should be in context of your 5 minute or 15 minute or 1 hour. So every lower time frame should be in context of one higher time frame above. So 1 minute is in context of the 5 minutes, 5 minutes is in context of the 50 minutes, etc., 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 etc. So now you can see that my idea and the draw on liquidity was this monthly volume imbalance and the SIBI above. So once we saw this sweep into the monthly BISI, we had this market structure. I was mainly looking for buys on the dollar, which means I was looking for sells on E-mini S&P. So if price wanted to go higher, it wants to go into this monthly volume imbalance and SIBI, I would love to see this low hold and expect from here higher prices. Now price is rejecting a bit, which is not the cleanest. I would love to see price move higher from here. If we break this low, if we get some downwards momentum, that's what we're going to touch on tomorrow again, because that's willingness of price. And if price isn't willing to agree with our draw on liquidity, then it sort of becomes low probability, and we shouldn't force or predict price. Willingness of price should always agree with our draw on liquidity. So that's basically it for me. This is what I do. I first go to the bonds, I analyze the monthly, go down to the weekly, then go down to the daily, then go to the dollar, do the same all over again. The dollar should agree with what I saw on the bonds. My main target is to draw liquidity on the monthly time frame. Then the weekly and daily should be in context of the monthly time frame. We are either rebalancing or taking liquidity. This can differ a little bit on the time frame because on the daily you can see we are targeting liquidity, but on the monthly you can see that we are rebalancing. Also remember that we're moving from PD rate to PD rate, so we're moving from this discount array to this premium array, possibly to a next discount array. Buy side liquidity to sell side liquidity, over and over. Again, this might not make perfectly sense to you, but take from it what you can, and hopefully it was insightful, and hopefully you learned from something from it. And this was my draw liquidity and my narrative from the past month and the upcoming month. I still expect dollar to move higher unless the willingness of price is to go down, and then we'll react accordingly. I hope this made sense. I'll see you at the video tomorrow about the willingness of price, which adds on perfectly to this video draw on liquidity. Thank you.